What is going on, you guys? It's your boy Alex here. Welcome back to the channel and to another video. If you guys are new to this channel or passing by here for the first time, I ask you to consider subscribing with the bell notifications so that you can be notified on all my future uploads. And while you're at it, go ahead and smash that like button so that my video can get out there to more people. So in today's video, I'm going to be talking to you guys about how you can trade options with Robinhood or any other app that you wanted to use. But for the most part, I know how it feels to be going on through the internet and just Googling a bunch of stuff and trying to piece together as much information as you could possibly can when it comes to this topic. And since everyone has different viewpoints on it, it can get really sticky. So in today's video, I'll be breaking it down step by step, just in case you are interested in starting to become an options trader, and what are the things that you can do when trading options. So if you're looking for the big picture of what trading options is, then by all means, you've come to the right place. So now it's time to jump right into it. So the first step before any of this is to make sure that you have a Robinhood account, and if you don't and wanted to make one, I'm going to go ahead and leave the link in the description down below where you can get a free stock for joining. So once you've logged in, next what you're going to do is go ahead and click on the magnifying glass icon or the search icon, and you're going to look up the stock that you're interested in. A put option gives you the right to purchase at a certain price, expecting the stock to go down. Simple enough, right? A call is a contract between a buyer and a seller, and we are the buyers. So when you're doing a call option, you're the buyer of that contract, and you have the rights reserved of purchasing that call option at that specific price in hopes that you pass the break even or strike price that you choose. So when you have a call, it gives you the right but no obligation to purchase up to 100 shares per contract of the stock that you're dealing with, the underlying stock, at the strike price. And the strike price is going to be something that you choose based on how you see the stock moving. And basically, once it passes that strike price, you can go ahead and sell it for a profit and secure your profits, or you can exercise it and buy those 100 shares. Now, me personally, I never do exercise that right of purchasing those 100 shares because I just go ahead and do it for the profits and then move on to the next trade. So when you have a call option, it gives you the right but not the obligation, meaning that you do not actually have to exercise that right to buy 100 shares at the strike price of your choosing. So you choose that strike price at the very beginning when you're going ahead to put that call option in, and if it reaches where you've wanted it to reach, then you can go ahead and buy those shares, or you can go ahead and sell it for a profit immediately. Alright, so we can break down the price of the premium with two key terms. One of them is going to be intrinsic value, and the other one's going to be extrinsic value. And what that is value given to the option because there's still time for it to mature and go deeper into the money. Additionally, we have something called implied volatility, and the way you can think of it is like this. Extrinsic value also comes with something called implied volatility. How volatile is the underlying stock, and is it a fast mover? Does it bounce around a lot, or is it more stable and moves slowly? So regardless of the current share price, there's still time for it to go into the money or even further into the money. And remember, the more into the money it is and the further it goes into the money, the more valuable your contract is. So there's some type of value given to it based on the time to maturity. If it bounces around a lot, then that's great for call options because that's where you make your profits. And the great thing about call options is that your loss is capped to the amount you paid for your premium, while the upside is actually indefinite. If it decides to take a run, then you'll be profiting throughout that whole entire uptrend. So something to keep in mind is that out of the money call options carry no intrinsic value. And the reason for this is because you cannot sell it for a profit immediately after you've placed the call. Another really important thing to keep in mind with extrinsic value is time decay. Every single day that you have a contract open, the extrinsic value begins to bleed off as you get closer to your expiration date. And the exact reason behind this is because it begins to cost you more as you get closer and closer to your expiration date. So remember that your premium is the largest amount of money you can lose when you get into an options trade. And say that you don't want to spend too much on a premium, then you'll be buying an out of the money call. And if it moves into the money, the further that it goes into the money, the more that you'll be profiting. If it stays out of the money, then nothing terrible happens and you'll just only lose your premium, which is your initial investment. Now, one last thing that I'd like to share with you guys, which is extremely important. If you guys don't do anything with your contract and it reaches the time of expiration, then you will lose your contract and it will be sold 1 hour prior to market close. So you want to make sure that you do something with it before market closes on the same day of your expiration date. And if you didn't, then you lose. So there's a lot of different factors when it comes to options trading, and today was just a little bit of a foundation and some basics with some terminology and some key things to keep in mind when beginning to options trade. And I hope I was able to help you guys out today. If there's anything else that you're wondering about, please be sure to let me know in the comment section down below. I'm going to continue to add a couple of different snippets and different videos where I can go ahead and get into further depth about the options trading, some strategies and different things that you can do and learn when you're first starting out. So that's going to be the end of today's video. I really hope you guys enjoyed. If you did, please be sure to drop a like and subscribe, and we'll be seeing you guys on the next one. Peace.